Well, in investing, we often hear about these big trend stories. And in Canada, one of the biggest trends we've talked about is an aging population and the companies that are trying to meet the needs of that. Chartwell is a great example of that. And the company has been in expansion mode. We were covering this week the fact that they have boosted their footprint in southern Ontario after a deal to acquire 6 senior housing communities for nearly $500 million. Vlad Volodarski is the CEO of Chartwell, and he joins us now. Thanks for being with us, Vlad. Maybe you can just outline how this deal came together.
Good morning, John. Yes, this was a great addition, certainly, to our portfolio. We are very happy to expand in the very strong southwestern Ontario market. We did not have a lot of presence in the London market in particular, and this portfolio gave us the opportunity to expand there. The dynamic in the senior housing space, as you mentioned, are very positive, actually never been better. Where the demand continues to grow because of the demographic growth of the senior population. And for a number of years now, there has been very little of new developments completed. And so this portfolio fits very well with our strategy to grow with the newer, higher quality, larger properties in the strong markets.
And when I look kind of at the Bay Street breakdown of your business, you get a lot of support from the analyst community, and in their own projections, there's a lot of growth. I mean, I know we talk a lot about the technology industry as a growth area, but even looking at the projections of the next few years, the growth numbers for you are rising. So from your vantage point, as you integrate these purchases, how are you thinking about growth going forward? Like, what is sort of the optimal way to grow the business going forward?
Well, the most important avenue of growth is to continue delivering excellent services to the residents that we serve, because most of our move-ins come from the referrals of the existing residents, and we're very focused on making their lives better every day. That is the sort of best way to grow the profitability of the business, is when you're focusing on the existing residents, and our teams are strictly focused on that. On the external growth side, you're correct. There has been quite a few opportunities for us to add high quality properties to our portfolio over the last couple of years, and our investment team had done tremendous work sourcing those opportunities and being able to close on them. We've announced over the last probably 18 months over $2 billion worth of acquisitions. And we continue to look for opportunities to add high quality properties to our portfolio going forward, to take advantage and to serve more seniors across the country, because the demand continues to grow. If you think about the demand growth, we have about 4.5% population growth in our age category over the next 20 years annually. And that is extremely high compared to what we had experienced in the last 20 years. So the demand will continue to grow, and high quality communities that provide more independent lifestyle for seniors and really showcase the joy and energy of what senior living can be are very important to deliver on that demand. And these communities are actually in line with that kind of strategy.
So I guess before I let you go, Vlad, because there's a lot of nation-building conversations taking place right now, as you know, just with the tensions with the U.S. and a huge amount of spending geared towards defense and geared towards infrastructure. And then we have this broader conversation around housing and building more affordable housing and all of that. But in your particular area, your category, what are some of the things that we should be thinking about to address that growing need for older Canadians?
Look, I'm a big believer in markets. And so when the market environment is conducive for development, private sector will develop. What needs to happen for that is, we had a huge escalation of construction costs over the last 10 years, actually, and that resulted in a slowdown in the construction activities. We had a period of time when the sector was building more retirement suites than were needed. And some markets, even today, have excess supply of the retirement suite, believe it or not. But I think when the environment is appropriate, when interest rates have come down a little bit more, when construction costs moderate, and the rental rate grows over time, will catch up, you will see a bit more development going on the private side. The government role, I think, is more limited to more funded and government-regulated sectors like long-term care, and maybe in some other provinces, assisted living, where they provide funding to that. And the governments, I think, are making efforts across the country to put more capital towards redevelopment. And we are seeing some development in the long-term care sector in Ontario, which is positive. We're focused more on the private pay side of the business. And for us, we are seeing the path for resumption of the development activities over the next couple of years, probably. We've announced earlier this month that we've started 2 developments in Quebec, where we're adding to our existing buildings additional capacity to meet the growing demand. And I think we'll continue down this path over time.